The past, present, and future of Bitcoin. Introduction to Bitcoin. Bitcoin, the first cryptocurrency, was introduced in 2009 by an individual or group using the pseudonym Satoshi Nakamoto. Its foundational goal was to create a decentralized digital currency that would allow peer-to-peer transactions without the need for intermediaries such as banks. This innovative concept emerged in the aftermath of the 2008 financial crisis, capturing the imaginations of tech enthusiasts and privacy advocates. Initially, Bitcoin was valued at a fraction of a cent and was primarily used for experimental purposes. One of the most famous early transactions was when 10,000 BTC were exchanged for 2 pizzas, underscoring Bitcoin's minimal value at the time. The past, early development and adoption. Bitcoin's journey can be divided into several key phases. 1. Early development 2009 to 2013, after its introduction. Bitcoin's value remained low and its use limited to a small group of tech-savvy individuals. In 2011, Bitcoin began to gain traction as it reached parity with the US dollar. The first major price spike occurred in late 2013 when Bitcoin reached over $1,000, driven by increased media coverage and growing public interest. 2. Mainstream recognition 2017. By 2017, Bitcoin had surged to nearly $20,000, capturing the attention of institutional investors, media, and the general public. This marked a significant turning point as Bitcoin began to be referred to as digital gold, a hedge against inflation and financial instability. The dramatic price increase also ignited a wave of initial coin offerings, ICOs, and the proliferation of other cryptocurrencies. 3. Regulatory scrutiny 2018 to 2020. Following the 2017 peak, Bitcoin's price experienced significant volatility and a prolonged bear market, dropping to around $3,000 by late 2018. This period prompted regulatory scrutiny from governments worldwide, leading to discussions about the need for frameworks to govern cryptocurrencies. The present, institutional recognition and market volatility. Today, Bitcoin has established itself as a legitimate asset class. Key developments include: 1. Institutional investment. Major companies and institutional investors have begun to adopt Bitcoin as part of their portfolios. Firms like MicroStrategy and Tesla have made substantial investments, while financial institutions like Fidelity and Goldman Sachs have started offering Bitcoin-related services. 2. Legal tender. In 2021, El Salvador became the first country to adopt Bitcoin as legal tender, a move that sparked both interest and controversy. Other nations are exploring similar paths, while many are working on regulatory frameworks to manage digital assets. 3. Market dynamics. Despite its growing acceptance, Bitcoin remains highly volatile. Prices can swing dramatically due to factors such as regulatory changes, technological advancements, and macroeconomic conditions. This volatility presents challenges for investors trying to navigate the market. Several notable events have shaped Bitcoin's current landscape. Increased use in payments. More businesses are beginning to accept Bitcoin as a form of payment, increasing its utility in everyday transactions. Technological innovations. Developments such as the Lightning Network aim to address scalability issues, allowing for faster and cheaper transactions. Environmental concerns. Bitcoin mining's high energy consumption has raised sustainability questions, leading to a growing focus on environmentally friendly alternatives. The future, predictions and challenges ahead. Looking forward, the future of Bitcoin is uncertain and divided among experts. 1. Potential growth. Many analysts believe that as institutional adoption increases and regulatory clarity improves, Bitcoin's price could stabilize and potentially exceed $100,000. Proponents envision a future where Bitcoin coexists with central bank digital currencies, CBDCs, as a primary digital asset. 2. Challenges. However, Bitcoin faces significant hurdles, including high energy consumption. The environmental impact of Bitcoin mining continues to provoke debate, with calls for more energy-efficient alternatives. Scalability. Current transaction speeds and fees can be problematic during periods of high demand. Regulatory risks. Governments worldwide are still grappling with how to regulate cryptocurrencies effectively, which could impact Bitcoin's future growth. 3. Market manipulation and volatility. Bitcoin's lower liquidity compared to traditional financial markets makes it vulnerable to manipulation by large players, complicating investment strategies and market timing. Common themes and differences among sources. Across various analyses, a few common themes emerge. Transformative journey. Bitcoin's evolution from a niche digital currency to a recognized asset class is widely acknowledged. Volatility. The unpredictable nature of Bitcoin's price is a consistent point of discussion, emphasizing the need for cautious investment approaches. Regulatory landscape. The ongoing development of regulatory frameworks is seen as a crucial factor influencing Bitcoin's future. However, predictions about Bitcoin's trajectory vary significantly, with some sources expressing optimism about its potential growth while others highlight the risks and challenges that could hinder its progress. Timeline of key events. 1. 2009, Bitcoin introduced by Satoshi Nakamoto. 2. 2010, first notable transaction, 10,000 BTC for 2 pizzas. 3. 2011, Bitcoin reaches parity with the US dollar. 4. 2013, Bitcoin experiences significant price surge exceeding $1,000. 5. 2017, Bitcoin peaks at nearly $20,000, gaining mainstream attention. 6. 2021, El Salvador adopts Bitcoin as legal tender, institutional interest rises. Conclusion. Bitcoin's narrative is one of innovation, volatility, and evolving acceptance. Its journey from obscurity to a significant player in the global financial landscape illustrates the complexities of digital assets. As Bitcoin continues to attract the interest of investors and regulators alike, understanding its past and present dynamics will be crucial for navigating the future of digital finance. While the road ahead is filled with opportunities, the challenges it faces will require adaptive strategies and informed decision-making from all stakeholders involved. Counterintuitive information regarding Bitcoin's past, present, and future can be identified in several aspects of its narrative. 1. Early value versus current perception. Initially, Bitcoin's value was virtually non-existent, symbolized by the famous transaction of 10,000 BTC for 2 pizzas. This stark contrast to its current status as a multi-thousand-dollar asset highlights how a digital currency once deemed worthless has emerged as a significant financial asset. The notion that something so seemingly trivial could become so valuable is counterintuitive, especially considering how many traditional assets have more stable histories of value retention. 2. Institutional adoption versus volatility. While institutional investors are increasingly recognizing Bitcoin as a legitimate asset class, its market remains highly volatile. The counterintuitive aspect here is that the very engagement of institutional players, who are typically seen as stabilizers in financial markets, does not inherently reduce Bitcoin's volatility. In fact, their presence can lead to heightened reactions to market news, thereby amplifying price swings rather than dampening them. 3. Legal tender yet volatile. El Salvador's adoption of Bitcoin as legal tender presents a paradox. On one hand, it signifies a major step towards mainstream acceptance and legitimacy. On the other hand, Bitcoin's inherent volatility poses risks to its utility as a stable currency. This contradiction raises questions about how a currency can be both widely accepted in a legal context and yet be so unstable in practical use. 4. The concept of digital gold. Bitcoin is often referred to as digital gold, a safe haven asset akin to physical gold. However, the historical context of gold as a stable store of value contrasts sharply with Bitcoin's erratic price movements. The counterintuitive idea here is that something positioned as a safe haven can experience extreme volatility, challenging traditional notions of what constitutes a reliable asset. 5. Future predictions and uncertainty. predictions about Bitcoin's future price, with some experts suggesting it could exceed $100,000, coexist with the acknowledgement of significant challenges such as high energy consumption and competition from other cryptocurrencies. The counterintuitive element is that despite these recognized hurdles, optimism about future price increases remains high. This juxtaposition of hope amidst realistic concerns poses a complex narrative about the future of Bitcoin. 6. Market timing difficulties. The discussion around the difficulty of timing the Bitcoin market reveals a counterintuitive understanding of investment strategies. While many investors seek to profit from price fluctuations, the reality is that the unpredictable nature of Bitcoin often leads to significant losses for those attempting to engage in short-term trading. The irony lies in the fact that the very desire to capitalize on volatility can lead to missed opportunities or detrimental financial decisions. 7. Energy consumption versus adoption. Bitcoin's high energy consumption is often criticized, especially in light of growing environmental concerns. However, this challenge has not hindered its adoption, rather it has sparked discussions about sustainable practices in cryptocurrency mining. The counterintuitive aspect is that while the energy issue is a significant drawback, it does not seem to deter investors or countries from embracing Bitcoin, suggesting a prioritization of potential financial gains over environmental considerations. These elements illustrate the complexities and contradictions within the Bitcoin narrative, highlighting how perceptions, adoption, and market dynamics can often defy conventional expectations. Important content overlooked in Bitcoin reports. 1. The significance of early transactions. One commonly overlooked aspect in discussions about Bitcoin is the historical significance of early transactions, such as the infamous purchase of 2 pizzas for 10,000 BTC in 2010. While often mentioned as a novelty, this event marks a critical point in Bitcoin's history. It reflects the initial skepticism and the experimental nature of cryptocurrencies. From a societal perspective, it shows how the value perception of Bitcoin has evolved dramatically from being virtually worthless to being associated with substantial monetary value today. Significance. This transaction serves as a reminder of the volatility in value perception in emerging technologies. It underscores the importance of understanding that current valuations can be radically different from future valuations, providing insight into market psychology and the factors influencing valuation shifts. 2. The role of decentralization versus institutional adoption. Many reports focus on Bitcoin's transition from a decentralized currency to an institutional asset class, but they often underestimate the implications of this shift. The tension between Bitcoin's original intent, decentralization, and its current status as a regulated asset raises significant questions regarding its fundamental nature. Significance. This duality highlights the potential loss of Bitcoin's original vision as a truly decentralized currency, which could affect its appeal among its foundational supporters. Moreover, it raises concerns about regulatory capture and the extent to which Bitcoin can maintain its independence from government intervention and traditional financial systems. 3. The impact of regulatory frameworks. While many discussions acknowledge the development of regulatory frameworks, the nuances and potential impacts of these regulations are often glossed over. Different countries are taking varying approaches to regulation, and these differences can have global implications for Bitcoin's usability and acceptance. Significance. The regulatory environment can drastically shape Bitcoin's future. For instance, stringent regulations in major economies may stifle innovation and adoption, while supportive frameworks could enhance legitimacy and integration into traditional financial systems. Understanding these dynamics is crucial for investors and stakeholders in predicting Bitcoin's trajectory. 4. Energy consumption and environmental impact. The conversation around Bitcoin's high energy consumption is frequently mentioned but rarely explored in depth. Critics often label Bitcoin as an environmentally detrimental technology, while supporters argue about the potential for renewable energy in mining operations. The discussion tends to overlook the broader implications of energy consumption in the context of climate change and sustainability. Significance: this issue is pivotal as it could lead to societal pushback against Bitcoin, potentially resulting in regulatory changes or a decline in public support. Furthermore, understanding alternative solutions such as Layer 2 scaling solutions or the development of more energy-efficient consensus mechanisms is essential for the long-term viability of Bitcoin. 5. The psychological factors influencing market behavior. The reports often focus on market metrics, technological advancements, or regulatory developments while neglecting the psychological elements influencing investor behavior. Concepts such as FOMO, fear of missing out, fear during downturns, and the herding behavior observed in cryptocurrency markets can play a critical role in Bitcoin's price volatility. Significance: recognizing these psychological factors is crucial for understanding market dynamics. They can lead to irrational decision-making, resulting in significant price swings that don't necessarily reflect the underlying value of Bitcoin. Investors who understand these behaviors may mitigate risks by adopting more disciplined investment strategies. 6. The comparison with central bank digital currencies (CBDCs). While the report mentions the potential coexistence of Bitcoin and CBDCs, it often fails to delve into the implications of this relationship. The emergence of CBDCs could significantly change the landscape of digital currencies, possibly affecting Bitcoin's adoption use cases and even its status as a store of value. Significance: analyzing how CBDCs may compete or complement Bitcoin is crucial. For instance, if CBDCs gain widespread adoption for day-to-day transactions, it could diminish Bitcoin's role as a transactional currency, pushing it further into the realm of a speculative asset. This could reshape investments and strategies surrounding Bitcoin in the future. 7. The technological innovations on the horizon. Many discussions skim over the potential future technological innovations that could impact Bitcoin. For example, advancements like the Lightning Network aim to improve scalability and transaction speed, potentially addressing criticisms regarding Bitcoin's usability. Significance: future technological developments could enhance Bitcoin's functionality, making it more appealing for everyday transactions and reinforcing its status as a legitimate currency rather than merely a speculative asset. Understanding these innovations is vital for anticipating Bitcoin's evolution and its place in the financial ecosystem. 8. The global economic context. Reports often focus on Bitcoin in isolation, neglecting the broader economic context in which it operates. Factors such as inflation rates, monetary policy, and global economic stability can significantly influence Bitcoin's value and adoption. Significance: situating Bitcoin within the global economic landscape allows for a more nuanced understanding of its appeal as a hedge against inflation or economic uncertainty. As economic conditions fluctuate, Bitcoin's role could shift, and investors must be mindful of these external influences when making decisions. Conclusion: while discussions about Bitcoin typically highlight its past, present, and potential future, several critical elements often receive insufficient attention. From the implications of early transactions to the psychological influences on market behavior, these overlooked aspects are crucial for a comprehensive understanding of Bitcoin's dynamics. Recognizing these factors can provide investors, regulators, and enthusiasts with a more holistic view of Bitcoin's evolving role in the financial landscape. Understanding this complexity is essential for navigating the digital asset market and making informed decisions about Bitcoin's place in the future of finance. 1. Historical development and mainstream adoption of Bitcoin. The evolution of Bitcoin from a niche project to a mainstream financial asset is a crucial point of analysis. Initially designed as a decentralized electronic cash system, Bitcoin's early years were marked by minimal value and limited use. The notable transaction of 10,000 BTC for 2 pizzas in 2010 exemplifies its initial obscurity. However, by 2017, Bitcoin's price had surged to nearly $20,000. and it began to be recognized as digital gold. This transformation highlights Bitcoin's growing acceptance and its potential as a hedge against inflation, particularly as skepticism toward traditional fiat currencies has risen. Analyzing this trajectory provides insights into how Bitcoin gained traction, the factors that fueled its rise, and its implications for the broader financial landscape. 2. Institutional recognition and market volatility. In the present context, Bitcoin's transition into a legitimate asset class attracting institutional investors is a key point for discussion. The adoption of Bitcoin as legal tender in El Salvador and the increasing interest from hedge funds signify a shift in perception among institutional players. However, Bitcoin's high volatility remains a major concern. Market fluctuations are influenced by various factors, including regulatory changes and technological advancements. The challenges of market timing due to volatility, susceptibility to news, and potential manipulation by large players necessitate cautious investment strategies. Analyzing these dynamics sheds light on the current challenges and opportunities for investors and the financial system at large. 3. Future predictions and challenges ahead. The future of Bitcoin is marked by uncertainty and competing narratives. While some experts predict that institutional adoption may lead to stabilization and price growth possibly exceeding $100,000, others highlight significant challenges such as high energy consumption, scalability, and competition from emerging cryptocurrencies. The potential coexistence of Bitcoin with central bank digital currencies (CBDCs) also raises questions about its future role in the financial ecosystem. A thorough examination of the predictions and challenges provides a nuanced understanding of the factors that will shape Bitcoin's future, including regulatory developments, technological innovations, and shifts in global economic conditions. For market timing difficulties and investment strategies. The difficulties associated with timing the Bitcoin market are a vital point for analysis, especially given the unpredictability of its price movements. Factors such as news sensitivity, the psychological impacts of FOMO, fear of missing out, and high volatility contribute to the challenges faced by investors. The narrative around the solutions offered by platforms like Yield Fund, which advocate for diversified investments and professional management to mitigate risks, presents an important discussion on investment strategies in the volatile crypto landscape. Evaluating these approaches can inform both individual and institutional investors on how to navigate the complexities of the Bitcoin market while pursuing long-term growth objectives. These 4 points provide a comprehensive framework for in-depth analysis and discussion on Bitcoin's historical significance, current market dynamics, future prospects, and investment strategies. 1. Tulip Mania 1636 to 1637. Often cited as one of the first recorded speculative bubbles, Tulip Mania occurred in the Netherlands during the Dutch Golden Age. Tulips, introduced to Europe from the Ottoman Empire, became a highly sought-after commodity. Prices skyrocketed, with some rare bulbs fetching prices equivalent to the cost of a house. The bubble burst in 1637, leading to a dramatic collapse in prices and widespread financial ruin for many investors. This event is frequently referenced in discussions about market speculation and the psychology of bubbles, much like the volatility seen in Bitcoin markets today. 2. The South Sea Bubble 1720. This financial disaster involved the South Sea Company, a British trading company that was granted a monopoly on trade with South America. Investors were lured by promises of immense profits, and a speculative frenzy ensued, leading to stock prices soaring to unsustainable levels. When the company's true potential became apparent, the stock price collapsed, resulting in significant financial losses for investors and shaking public confidence in the stock market. Similarities can be drawn to Bitcoin's rise and fall, as both cases involve speculative investment and rapid price fluctuations. 3. The dot-com bubble, late 1990s, early 2000s. The dot-com bubble was characterized by excessive speculation in internet-based companies. Fueled by the rapid growth of the internet, many technology stocks saw their prices inflate dramatically. Companies with little to no profit were valued at billions, leading to a market crash in 2000. Investors lost significant amounts of money, but the aftermath saw the internet mature into a foundational component of the modern economy. This historical case parallels Bitcoin and other cryptocurrencies in how rapid growth can lead to speculative investment market correction and eventual maturation of the technology involved. Future outlook, predictions for Bitcoin. As we look ahead, the future of Bitcoin is an intriguing subject filled with potential and uncertainty. Given the rapid evolution of the cryptocurrency landscape and the increasing integration of digital assets into the global financial system, several key trends and predictions can be discerned. Institutional adoption and mainstream integration. One of the most significant trends likely to shape Bitcoin's future is the continued adoption by institutional investors. Over the past few years, major financial institutions have begun to recognize Bitcoin as a legitimate asset class. This trend is expected to strengthen, driven by the increasing acceptance of cryptocurrencies by hedge funds, pension funds, and even sovereign wealth funds. As institutional capital flows into Bitcoin, it could lead to greater price stability and a more mature market environment. Predictions suggest that Bitcoin could reach new all-time highs, with some analysts forecasting its price to exceed $100,000 in the next few years. This price surge would be fueled by increased demand, especially from institutional players looking for a hedge against inflation and economic instability. Regulatory developments. Regulation will play a crucial role in Bitcoin's future. As governments around the world grapple with how to regulate cryptocurrencies, the resulting frameworks could either bolster or hinder Bitcoin's growth. Countries like El Salvador have already recognized Bitcoin as legal tender, signaling a shift in regulatory acceptance. However, potential crackdowns in jurisdictions like the United States or the European Union could create volatility and uncertainty. The future will likely see a balance between regulation and innovation. Positive regulatory developments such as the approval of Bitcoin ETFs, exchange-traded funds, and clearer tax guidelines would enhance Bitcoin's legitimacy and accessibility for average investors, further driving demand. Technological innovations. Technological advancements within the Bitcoin network and the broader cryptocurrency ecosystem will also influence its future. Solutions aimed at addressing scalability and transaction speed, such as the Lightning Network, may help Bitcoin become more practical for everyday transactions. Enhanced privacy features and interoperability with other blockchain networks could also play a key role in Bitcoin's adoption. Moreover, Bitcoin's energy consumption is a growing concern. The industry is witnessing a push towards more sustainable mining practices, which could improve Bitcoin's public perception. Innovations in mining technology and the use of renewable energy sources could mitigate environmental criticisms and support Bitcoin's long-term viability. Competition from other cryptocurrencies. Bitcoin's future will inevitably be affected by competition from other cryptocurrencies and blockchain technologies. Emerging cryptocurrencies, often labeled as Ethereum killers, are continually evolving and offering unique features that Bitcoin does not. For instance, Ethereum's smart contract functionality has positioned it as a leader in decentralized finance, DeFi, and non-fungible tokens (NFTs). While Bitcoin maintains its status as the first and most recognized cryptocurrency, its dominance could be challenged as investors diversify into other digital assets. The coexistence of Bitcoin with central bank digital currencies (CBDCs) and other cryptocurrencies could reshape the market landscape. Evolving use cases and adoption. Bitcoin's future may also involve the expansion of its use cases beyond investment. As more businesses start accepting Bitcoin for transactions, its utility as a medium of exchange could enhance its value proposition. The integration of Bitcoin into payment systems and its adoption by e-commerce platforms and retail stores will be critical in establishing Bitcoin as a viable alternative to traditional currencies. Furthermore, the ongoing financial crises in various regions could drive individuals toward Bitcoin as a store of value and a means of protecting wealth. In countries with unstable currencies or economic turmoil, Bitcoin could gain traction as a safe haven asset, further diversifying its user base. Conclusion: the future of Bitcoin is poised at a crossroads of opportunity and challenge. While predictions indicate substantial growth driven by institutional adoption, regulatory clarity, and technological advancements, significant hurdles remain. The interplay between competition, regulatory frameworks, and technological evolution will ultimately shape Bitcoin's trajectory. Investors and stakeholders must remain vigilant and adaptable to navigate this dynamic landscape. Bitcoin's journey from a niche digital currency to a mainstream asset class has already been remarkable, and the next chapter promises to be just as transformative. As the cryptocurrency continues to mature, its role in the global economy and financial markets will likely expand, making it a crucial element of future investment strategies and economic systems.